Good afternoon, everybody. Phil Simons with Columbia Grain here in your Friday afternoon weekly grain market recap. Well, we didn't have a whole lot of fresh fundamental data on tap this week, but let's go ahead and dive right into it. Take a look and see what the market's actually provided us with this week. So I'm going to share my screen with you again, and we're going to navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to go to the Producer Solutions tab. And again, this is where we house all of our pertinent data that could be potentially driving the markets. But again, this week, quite honestly, there wasn't a whole heck of a lot of fresh fundamental data. We did have, some renewed concern coming up between Russia and Ukraine as some intensified strikes occurred this week, actually giving a little bit of a rebound to the futures markets in its entirety, quite honestly, and really across the whole complex. But next week on Thursday, June 12th, we will have the June World Agriculture Supply and Demand estimate from the USDA. So that'll definitely be something to continue to monitor as we go forward into next week. So definitely start thinking now as terms of where could we have or where should we have some good till canceled orders out there to create anything for new crop, especially when we're looking at hedge to arrive contracts, basis contracts, straight up cash contracts, or any of our accumulator platform as well. Be sure to get your orders out there and get them working before that report comes out because it could have a little bit of fireworks, associated with it. So we'll definitely have to continue to wait and see what actually happens there, but definitely get your orders out there and working. But this week we did have the export sales that came out yesterday, and take a look at that real quick. We had pretty decent round of sales again for corn, old crop corn coming in at 37, just over 37 million bushels. Kind of higher end of the estimate, but didn't blow the doors off of the estimates like we have been, the last few weeks, the last couple of months, quite honestly, on old crop corn. So starting to tame down a little bit there. And when we look at new crop or on old crop soybeans, we actually came in at 7.1 million bushels and kind of on the lighter end of the range of estimates in terms of where we were actually anticipating to see the numbers coming in at. And all wheat, when we look at the new crop stuff, kind of a smattering, really more on spring wheat and winter wheat. But when we look at winter wheat or spring wheat at a total of 4.1 million bushels sold last week. And on winter wheat had 9.5 million bushels. So pretty decent weeks there for those two classes. On soft red, you actually had 3.8 million bushels sold on the week. And on soft white, it was actually coming in as a negative number because it did look like we actually had some new crop actually shift back to old crop and ship a little early. So it was having given the chart a little bit of a tailspin there. But anyway, definitely nice to see some of the bi-class wheats continuing to see some attention here. But when the futures actually we actually closed the week out on a positive note and we're actually at the higher end of the range from where we were seeing the overall futures trade at here this week. We look at new crop again, specifically look at new crop D's corn on the left-hand side of your screen. We actually had a weekly range of 16 cents. We're actually able to hold on to an 11-cent gain week on week, so that was definitely nice to see. New crop beans, we actually had a 23-cent range there. Actually closed the week out with a net gain of 10 cents week on week. And when we look at the wheat complex, we actually had a pretty good, pretty strong week there again, as we did close at the higher end of the overall weekly ranges that we saw this week. But Kansas September had a 21-cent range, and we actually were able to gain 16 cents on the week here. And when we look at Chicago, we had a 24-cent range there. We're actually able to hold on to 20 cents of that overall range and had a gain of 20 cents when the dust settled here today. And in Minneapolis, we actually had a weekly range of 18 cents, and we actually were able to hold on to 7 cents on the week here when things actually settled out. So definitely nice to see us closing at the higher end of the estimates again. But again, next week we're going to have the June 12th supply and demand estimate report coming out, and that'll be on Thursday. So definitely be sure to get a hold of your local managers and buyers and get your orders out there and get them working before that date, just so we have something out there and working. The only other thing really that we were looking at this week was the French wheat. Their ratings from a good to excellent standpoint, they actually did see another reduction of 1 percentage point. So right now they're sitting at 69% good to excellent. Still way better than where we were last year at this time, which was coming in at 62%. But again, we are seeing things kind of ease off a little bit there. And we are seeing a little bit of maybe some potential production concerns in the U.S., maybe more on quality issues than anything else. So again, definitely continue to monitor that as we move forward. And then also just the whole Russia-Ukraine. The strikes are starting to definitely intensify. It's getting a little bit more reaction and more interest, especially when we look at where the managed money positions have their net short positions at right now. So maybe starting to get a little bit tight under the collar in terms of where do we want to see actually them cover in some of their position. But other than that, we're going to go ahead and wrap everything up for the week here. I hope everybody has a great weekend. And remember, the first 5 letters of broker spell broke. Have a great weekend, everybody. We'll talk with you next week.